Hello traders, in this module we're going to go over the big idea to really cement home the whole understanding behind ACB setups and what's so important about those and how to simplify that for yourself and the understanding and the advantage that these setups hold for you. Now for my sons, I've made it rinse and repeat in that they're only going to be looking for these setups on a Thursday, and we'll talk about that in a moment. And then looking for the 5-minute EMA coil as part of a larger time frame setup, and working from the understanding of the lowest close of the month or week or the highest close of the month or week in an instrument, in any instrument, after they have closed in breakout, and with the understanding that we're working in a new month or a new week or a new day. We're not trading intraday from highs or lows or anything like that. We're looking for specific setups based on the close of the previous day. When a new month starts, we have new opportunities, which we'll be going over in a moment, or a new week. Now, these can be trend trades or reversal trades. Not everything has to be a reversal. Some breakouts succeed while others may fail. But we also may be trading a reversal in line with a higher time frame trend. But the beautiful thing about the coil is that you cannot counter trend. There's no thinking to it. I made this dummy proof, and you're placing a position into the market, a stop loss, and walking away because those setups aren't coming back. Now, why Thursday? Thursday because we have Monday, Tuesday, Wednesday, a template setting up 1, 2, 3 closing price. Now, it's not always going to play out every single week on every instrument, but we are going to have the highest probability on a Thursday of these setups occurring. And that may just have something to do with how things work in the bigger picture. I can't say that for certainty, but I do know that there's a high probability of Thursday being the day that these opportunities will show up on. Now, you're going to find them on a Tuesday sometimes, which is day 2 on the front side of the week. You're going to find them on a Monday after a Wednesday, Thursday, Friday, but the same idea will apply. And that's why with traders who are tracking these instruments, we'll have opportunities on a Friday sometimes, as we just saw on copper. We can find opportunities on a Tuesday on the front side of a week as part of that larger template with the same understanding applying highest close of the month, lowest close of the month. And sometimes the reason for that is we have high impact major red news distributed throughout the month on the calendar. We're going to talk about that in a moment. But non-farm payrolls starts the first week of a month off, and week 1 can typically start off inside of a previous monthly high or low range. And we're going to walk through tracking some of the most commonly traded instruments that are popular with traders and going back through and identifying even days throughout the template that will offer traders opportunities. But the number one thing that I'm teaching my sons is on a Thursday, tracking a market that has closed in breakouts. If we have instruments that close in breakout either at the highest or lowest closing prices of a month or of that week, because that week could be inside of a larger template, we could be trading back up into a market that's falling down for them to resume the trend, an easy money collapse coiled market into the session when they're trading, or a vertical move at the beginning of a month after a 1, 2, 3 stop hunt. And we're trying to track an instrument that has either gone down to form the lowest closing price of the month or the highest closing price of the month, or has broken out end of month or new month and now gone to 3 higher closes or 3 lower closes in breakout and consolidating into a new month or into the high or low closing price of the month in a new week. And that 1, 2, 3 setup sometimes can happen on a Friday, Monday, Tuesday at the end of a month, or we can have a Thursday, Friday, Monday at the end of a month or new month, which is why we'll see some of these setups show up on different dates. But the easy model is looking at Monday, Tuesday, Wednesday, and either having a coil for a trend continuation in strongly bullish markets or bearish markets, or a market that has now broken to new extremes for a stop hunt or to trigger breakouts, and is now going to potentially violently reverse, whether it's for one day only or in line back with a higher time frame reversal, meaning we could be breaking out of a new month and reversing to the other side of a month or a week itself, a larger opportunity. But the day itself should be an ACB template where they've got traders trapped on the wrong side of a move if it's a reversal, or if they're continuing to expand a breakout already in progress. So in simple terms, you can have these opportunities show up on other days in different sessions depending on which instruments you're tracking, but essentially we're looking for 3 higher closes in breakout. Now they don't have to be successive closes in breakout. We can have a market breakout, 1, 2, 3, be 3 higher closes against a down moving market, or we can have a market closing in breakout at the extreme of a month, or 3 lower closes in breakout after breaking out. So we'll go through some examples of that. But rinse and repeat means my sons, myself, or anybody can go to the screen on a Thursday and look at what markets have broken out at. Are we at the highest or lowest closing price of a month or week? And now how is this setting up into the session that you're trading? So in this particular example, looking at the NASDAQ, we have Monday breaking out, closing and breakout, number 1. Tuesday is sideways in terms of its closing price. Wednesday closing higher, not breaking out of the range, but we're at the highest closing price of the month. And then the market coils up into our 10 a.m. hour, the new 4-hour rotation for an all-in collapse. 1, 2, 3, the highest close of the month, coiling into our 4-hour candle rotation. And our 10 a.m. is our new 4-hour candle. Now, I've talked about this in the first module that 6 a.m. in certain instances can be putting in the extreme, the 6 a.m. 4-hour rotation. That doesn't mean 6 a.m., but the 6 a.m. 4-hour candle on indexes, metals, energies, at rotation of time, they may already be putting in the extreme and the market starts to move into the New York session already in process from one of those extremes. And we've looked at some examples of that, but we'll do that again. But 10 a.m. is the new 4-hour cycle. Now on currencies and crypto, that 9 a.m. is the beginning of the new 4-hour cycle. And often we can see sometimes between 5 and 9 a.m. in the morning putting in the extreme, so we have an early entry opportunity sometimes around 7 a.m., but only when we have that setup in place on a 1, 2, 3 at an extreme. And when we go to our coil, as I mentioned before, I'm getting in anywhere. Now, obviously, the better you get at this, you're going to be getting in on the breakdown right away. But as I've taught my sons, taking a position inside here and then putting your stop at the extreme and walking away. It doesn't have to be exactly on whatever minute or candle. Once we have our entry back inside of that coil, putting an entry in and a stop at the extreme and walking away. A set and forget template. You can put a profit target in also, or hold that trade till close. Now, sometimes we can have a trend trade, a market that's continuing to strongly trend. We can have a market that coils into our 7 a.m. 4-hour, or 6 a.m. 4-hour rotation and be getting an early entry, no major red news. And as that market starts to accelerate into the parabolic coil, it's already heading into the New York Open. This is an index again, the NASDAQ. But the coil in a strongly trending market can allow us to position ourselves, and the same process applies. Taking a position, putting our stop loss at the extreme, or again, as you get more confident and better skilled, using that 1-bar stop, no major red news on that schedule, walking away, setting and forgetting, letting the market hold till close, or if it's going to continue, leaving that position in the market. Now, one of the things I want to walk through is when we start our new month, recognizing on certain instruments whether you are inside or outside of the monthly range when the market starts to trade. So we have a new month, a new timing cycle. We went through this in the beginning of the first module. Now we have a new month starting, and we have a market starting from the inside of a month, closing in breakout. Just simply recognizing when the month starts, when the month is starting, are we inside of a monthly range or are we outside? Now, if we're inside of a monthly range, do we already have an existing setup? Can we find a 1, 2, 3 already there, or is the market opening in breakout? So we have a market in this particular case that's opening inside of the range on a day that's closed in breakout. So we have our first trading day of the month about to start on a day that's closed in breakout. So we look at our template. We have a market that we're starting a brand new month. We have Monday, Tuesday closing in breakout at the low of the month. The market auctions up and closes as the highest closing price of the week on a day closing in breakout, going into the first trading day of the new month on a Thursday. Being now that we may be trading all the way back down to the low of the month on the first day of a new month, thinking back to 1, 2, 3, we may be going lower to put in a new lowest closing price of the month. But we have our sideways coil heading into our New York session. Now, keeping things really simple, 1, 2, 3, thesis being we're going to have a coiled market heading into our new 4-hour rotation at the high of the week. And just repeating, taking a position and putting the stop either at the extreme, not worried about which candle. Once 10 a.m. prints and starts to break down, getting into the market, in the better you get at this, recognizing where you can continue to scale into this, or putting your stop at the extreme, just putting a position in the market, putting a stop in place. Once that market breaks the level, walking away and letting the trade play out. When we put our EMA coil, we'll just zoom in here on this, just keeping things simple, simple, simple. Getting in the market, putting a stop in place, and walking away. Now, obviously, again, if the more skilled you get at this, recognizing the setup that you have and scaling in. Scaling in. The reason I like to scale in myself is because then I can take some out if I want to get paid on this trade right away, removing some possibly on a range expansion target. I like to target 200% of a range sometimes to take some off. Or in this particular case, because it's the first day of a new month, walking away. But once it clears that monthly level, definitely making sure that I get paid on the trade. Now, in other cases, like as I've told my sons, set and forget, walk away. It's a Thursday. It's going to continue to trade into the next day. Thesis being now either getting out prior to the rollover, or if they're confident that this now may continue to go into a 1, 2, 3 setup into the new month, then leaving that trade or leaving a trailer in the market to continue to profit off of a winning trade setup. So one of the exercises I will challenge you with to go through to really cement this home is that when a new month is about to start, looking at how the market is trading into those last few days of the current trading month, 1, 2, 3, parabolic large move, regardless of what day it is. You'll see this setup show up repeatedly, especially on the NASDAQ, and now we can see it on other instruments as well. But just asking yourself the question, when we're about to start the first trading day of a new month, are we inside of a range or are we outside of the range? And are they closing in breakout? So if a market is not in breakout, do we already have evidence of a highest close already in place for a first red day trade in this particular case, depending on which day it is? Or do we wait until the market breaks out and then watch how it behaves? Are we putting in the new lowest closing price of the month? And if we are putting in the new lowest closing price of the month into our Monday, Tuesday, Wednesday setup, do I get a parabolic coil? Now, in my son's case, do I have a setup at the lowest closing price of the week, or a first green day trade coil, or are we at the highest closing price of a month, and do I have a parabolic coil sideways at the extreme in a market that has closed in breakout. So if we break a monthly level and it's a 1, 2, 3, do I have a setup on that day? So if we just step back and look at that, we looked at it on our daily chart. We're about to start our new month. We had the highest closing price of the month put in place on our Thursday and the highest price of the month. And we're heading into our new month. We have a first red day. The market had already closed in breakout. This was the highest closing price of the month. And our new month starts. We had a lower low and we have a first red day collapsing into our new month. We have a nice coil on a Tuesday into the New York Open, again the NASDAQ, for a parabolic ACB template. Now remembering that this is a non-farm payrolls week. The first week in a new month is a non-farm payrolls week. You can look at any instrument to find these opportunities. And I'm going to, in the next section of this video, walk through several pairs end of day and just identify markets that have closed in breakout. And then we'll look at the opportunities that may present in that template, that Monday, Tuesday, Wednesday template, but also recognizing for traders that when they're tracking an instrument, when the new month starts or when the month is trading, if we have established an extreme, if they're trapping traders on markets that have either closed in breakout or in a 1, 2, 3 setup, targeting these opportunities. Your piece of homework until the next video is to walk through and recognize, do we have a lowest or highest closing price in place? Is the market in consolidation? Do we have 3 higher closes heading into the trading day on any instrument? Do we have a market that's closed in breakout? Do we have a market that is potentially now trapping traders up high or down low, one Monday, Tuesday, Wednesday into Thursday? Or do they continue to trade higher, consolidating and going 1, 2, 3 into a Monday, Tuesday pattern? Or we could have a Wednesday setup that actually is driven by a news catalyst, a CPI or something like that. But are we putting in one of the extremes or trading back into one of the extremes? Do we have a market trapping traders at the lowest or highest closing price of a week or month? And then looking at the new monthly setup and ask the question, are you inside or outside? So walking through the daily chart gives traders the opportunity to now identify a market that is potentially trapping traders into the open of a new month. And if there is no setup, is the market now working its way into a new extreme and going to 3 lower closes or 3 higher closes into the low close of a month or the low close of a week? So go through that, walk through your daily charts, because that can identify potential explosive moves. As we zoom in on that chart of gold, Monday, our opening range, a lower close, breaking out of Friday's range on Tuesday, and Wednesday closing lower. The lowest closing price of the month, 3 lower closes into Thursday, 1, 2, 3. Didn't get a sideways coil, but we have now an opportunity for traders in the Asian window. Now here's the beautiful thing. If we follow that market now, we come later to our session and we see, oh, the market's already taken off. I missed that trade. Or maybe traders in London saw that as the lowest closing price and they have a coil. They have a coil now for that continuation trade. But we close in breakout heading into Friday. We close in breakout heading into Friday. And the beautiful thing about this now is that when we track this across, we have a market that is potentially now reversing from the lowest closing price of the month, and we can follow that opportunity day 1, day 2, day 3 for an explosive continuation trend trade, whether that's in Asia, London, or New York. Now, that's the importance of understanding when markets break out or when they are moving 1, 2, 3 to put in one of the extremes from the inside of a range when a new month begins. So for some homework, just for starters, walk through your daily charts and recognize as we walk through each month, are you inside of the range or are you outside? And what happens when a day closes in breakout? So getting away from the idea of trading every day, trying to catch the high and catch the low, what happens when a day closes in breakout, and are we inside of the month, or has it broken out from the high or low of the previous monthly range? And then go down to your smaller time frame, Monday, Tuesday, Wednesday templates, to identify if there's a parabolic opportunity. Now, different instruments, again, 3 higher closes. Different instruments will trade differently in different sessions. The Japanese yen might trade stronger in the Asian session. However, we will still get opportunities in line with reversals or trend trades, and often get trades in the US window as well. And following those markets into the end of a month, week 1, week 2, week 3, week 4, and understanding the economic calendar and how these news releases can either set a market up for us, taking markets into breakout, and this cycle repeats every month. Non-farm payroll, CPI, FOMC, and individual rate announcements for currency pairs. Bank of Japan, Swiss National Bank, different countries, different announcements will affect those instruments and how they can use that to set up explosive, powerful opportunities. Now, they may not all show up in our session, but this helps us identify candidates using the calendar and understanding what happens if a market has broken out, or when it's opening in a new month. Are we inside or outside? Do we already have an existing opportunity, and following either a strongly trending market or a market that is about to explode and trade the other way? So we'll see you in the next video, traders.